Howdy, folks, and welcome to the Daily Coin. My name is Rory, and this is a continuation of the conversation that Louis Cammarosano and I had on May the 19th, 2016. Thank you very much.
I mean, it's crazy. I would say if you don't have physical, you need to get physical, and you need to continue to get it.
Well,
Go ahead.
what I was going to say though is, the recent price action now has gone down, and that's all on the concept that now the Federal Reserve is making noises about, and their most recent minutes show that a rate hike may be on the table in June, and that some of the Fed participants, the non-voting members at least, are saying, "Oh no, we're still doing 2, 3, and 4 rate hikes this year," which the market is taking very seriously, and it's driving up the dollar and pushing down, I think at least temporarily, gold and silver.
Yeah, it's as far as them going down. Jeff Nielsen has well documented this price smash and this time frame, everything. He's called it for several weeks, if not the last 2 or 3 months. He's saying that this whole rally has been a fake rally because silver's been leading the way, and he has it well documented, and he's been spot on. He's also said that it's going to go down, but when it starts to go back up, that's it. It's probably not going to look back, and that's according to his analysis.
Mm-hmm.
So, and that makes sense. And as far as the Fed making their noise about raise rates, not raise rates, it's the same nonsense
Exactly
that they've been doing for the past 2 years. And how in the world they can convince these algorithms to begin trading is beyond me, but they do, and that's what happens.
Yep. So, think about it. They've done one rate hike in 10 years, and you would think that the markets would listen to them and say, "Oh, they're crying wolf again." And if you notice what happened, it seemed like rate hikes were off the table, and the dollar started falling like a stone. And then they trot out Fed President Lockhart, Williams, and they all start talking rate hike, and then the dollar recovers. And they're thinking maybe they can talk it up enough so that they don't have to raise rates. But if if it goes down, the dollar falls, and people don't believe the talk, they will pull a little quarter rate hike. But the thing that people don't realize is they're not going to raise rates to 2 and 3%. All they're going to do is keep rates high enough so that the U.S. bonds are more attractive than the Japanese bonds and the European, than any other bond, because it pays a slight interest rates. They don't want the dollar index to go to 110, 120. Then they won't get their inflation because the dollar will be too strong. All they're trying to do is keep the dollar strong enough, not too strong, not too weak. And the only way they can do that is by yakking, raising rates, or saying they're not going to raise rates.
Right.
It's all a game. So they get really super dovish. The dollar goes down. They say, "Oh, that was a mistake." Then they start talking again. They're going to raise rates. If people believe them, then maybe they won't raise rates in June. They'll say, "Oh, Brexit. Oh, we can't do it because Brexit." And then they'll say July. And if the dollar slides back down and people start to believe the Fed's bluffing, then they'll raise rates in July. And all they have to do is do it once, and that lasts them, if you think about it, lasts them a year. Then they could talk about the next one. They could talk about global uncertainty, Donald Trump, whatever they want, election year. They always have an excuse not to do it.
Right.
And then they can always make excuses to do it.
Exactly.
But they rarely actually ever do it. But I'm just saying they might do it if the talking doesn't work.
Well, we'll find out in June. And I keep going back to the fact that back in December, Janet Yellen said we were going to have 4 rate hikes in 2016. Well, they've already missed one. They've already missed one opportunity. Are they going to miss the second opportunity? And are they going to pile in the third and fourth opportunities that come up in the third and fourth quarter?
If you remember, they said they changed the 4 to 2.
Yes.
Which is already like, oh, okay, what changed?
Yeah, exactly. What changed besides the date? That's it. It's the only thing that changed.
They're going to do the same thing. They're now talking 2 and 3. They get everybody nervous. If they have to do one to keep the credibility, they'll do one. And then but once people realize that they're not on this path, they're trying to still convince people they're on this tightening path that's going to be gradual. They're just going to do a one-off here and there, and that's it. But I don't believe the people who say they can't, never, they will. No, that's not true. They've already proven they can and they will, if they have to keep the dollar where they want it and to keep Treasury bond demand strong enough so that we can continue to fund our deficit.
Well, now we've got bonds being dumped all over the world right now as we speak, and they don't care. These creditor nations are looking at it and going, "This is all smoke and mirrors. We've seen, we've heard, and we're sick of it. We are sick of it, and we are getting rid of it."
QE. They saw the United States unilaterally just decide they were going to take interest rates to zero, and they were going to print trillions of dollars to buy bonds.
Right.
Basically undervalued. I just put a piece out today why the Fed raised rates last year and will do so again this year. And the basis is they raised the rates in 2015 to protect the dollar and demand for the Treasury bonds, and they'll do it again in 16 if they have to.
They will. They're going to,
because when they don't have credibility, the dollar goes down. So all this talking and yakking about rate hikes, if they don't do it, the bluff will be called. People will sell dollars, and countries will sell their bonds. They don't want that, but they can be enticed back with a rate hike.
We'll see.
Or they can be enticed back. The dollar can be stronger as long as the Fed appears to be prudent, meaning they're not on this reckless policy of negative interest rates. What's funny, though, Roy, they do talk about, while they're talking about raising rates, they're also talking about considering negative rates.
Right.
Which means they're not going to raise rates too far if they've already got their foot in the negative rate interest door.
Yep. Well, all I can say is, got physical.
Well, actually, if they raise rates, Rory, you're right. There will be quite a disturbance in the equity and bond markets. That would be good for gold. That kind of positive disturbance. Sure, they raise rates, and then people are thinking, wow, now the Fed's really serious. They're going to raise them again. The markets will collapse. The S&P will go under 2,000, and the Dow will dip, and then the Fed will pull back from that. Just like they did last time. The reason they pulled back from their 4 rate hikes was the market collapsed in January and February.
Correct.
Now
well, it had already collapsed. I mean, they just failed to recognize it or to mention it during their FOMC meeting in December. I mean, the market had already collapsed. I mean, retail sales for...
no, I don't mean the market. I'm sorry. I meant the stock market had collapsed. January and February was off to the worst start ever.
Well, that's true. But aren't all of these things tied together?
Of course they are.
You've got... Exactly. That's my point. In that, so you've already got, one of the worst buying seasons, selling seasons in history, and then you open up the new year with the worst market opening in the history of the stock market.
Correct.
So,
of course, they start saying they're not going to raise rates.
Of course, they had to. They
had
to. They were forced to do that because reality smacked them in the face.
I like that Mike Tyson line. Everyone has a plan until they get punched in the mouth.
Exactly. And that's exactly what happened. They got punched in the mouth.
Hard.
So, yeah.
Buster Douglas style.
Wait till their hand is forced again because of Brexit or the treasuries are being dumped at a record pace, and and their hand is forced and they have to do it again. And then what's going to happen? That's when that's when it's going to get interesting. And that's when, if you don't have physical gold and silver, it could be weeks or months before you're able to get it. And when you do, and when you're able to get it, it's going to be at a price that you probably won't like a whole lot.
Or be able to pay with your deflated dollars, right?
Exactly. You might not even be able to pay it. So, but anyway, well, been speaking once again, Louis Camorosano, smallgold.com. Louis, this is becoming a regular thing with us.
I'm enjoying it. Thank you very much for having me on. I appreciate your insights and your hosting me on the show.
No, I'm loving it, dude. This is I'm glad that we're doing it because I think the people are responding well, and I like doing it. You're a good guy. I like your analysis, so it's all good.
Oh, great. Thanks, Rory.
Well, and we will pick it up again. I can't remember when we're scheduled again, but I'll take a look at
Next week to do the Russian and Chinese, I believe. The Russian and Chinese and Indian gold numbers.
Oh, that's right. The national gold numbers. Yep.
Mm-hmm.
What they're looting from the mines.
Yeah. Well, that's the other thing to mention is the the bank, the ICBC Standard Bank of China, the largest bank in China, purchased Barclays London Gold Vault.
2,000 ton gold vault.
Yes.
Yes. So they're buying, and they already own the world's largest gold vault that's under J.P. Morgan or the Federal Reserve there in New York. And they're
by owning the building. Is that it?
Yes, that is correct. So that's follow what the wealthy people. If you do what the wealthy people are doing, then you have a better chance of being wealthy yourself. And right now, the Chinese are the ones that have all the wealth. And what are they doing? They're buying gold vaults.
Yeah. You know what they're not buying, Rory? They're not buying GLD.
They're not buying treasuries either.
No. We can go through that too. Have some charts on their treasury sales and then charts on their gold reserve acquisitions.
Yes. I'm sure they'll will line up quite nicely. Well, we'll talk with you next week there, Lewis, and you have a
Excellent,
wonderful
Rory.
weekend, and I certainly appreciate all the time and all the knowledge.
Thank you very much, Rory.
Bye-bye.